Pay me, pay me, pay me my silver now. Pay me or go to jail. Pay me my silver now.
Good morning, Big Square, RoadRoo.com. Very exciting day as usual in the silver market. I'll get to it in 1 second. I posted for the private road members a discussion I had yesterday with Andy Sheckman about silver price suppression and what that means to... We talk about something that's not talked about very much. It's on the private road, so you got to be a member and all that, blah, blah, blah. To join the private road, go to roadroo.com, hit subscribe today. If you want free email updates, fill out your name and email address on the left side, road2ruta.com. You do not want to miss front row for this show, the epic show. Silver up a little bit today, but still below those moving averages. That's the key. The key to the 50-year normal rig job is to keep the prices below the moving averages so that the commercials can close out their shorts. And that's what they've been doing for the past 2 years. They want to close out all their shorts and then go long. It's going to be a very, very, very hard time to go long because for every long, there's got to be a short. And who in their right mind would take that position, given that we're in a silver supply deficit for the past 3 years because of artificial price manipulation. And there is no sign of that letting up. Definitely not this year. Definitely not next year. Definitely not ever until they let the price go. When they let the price go to a fair market value, then people invest in it. New mines get started. It takes, 5 to 10 years for a new mine to start pumping out silver. And there just aren't very many that we've found. If you look at the USGS puts out a study of commodities that are at our current rate of consumption, how long will it take to deplete the entire proven reserves? Silver's always amongst the lowest, 18 to 20 years. Yes, they extend it when they find new stuff, but there's not a lot of new stuff being found, by the way. Gold, yeah. I mean, there's so much gold out there. It's crazy. But silver, no. So, yeah, very interesting time. So as long as they keep this below here, this is when the criminals are kind of scrubbing up their area, making sure all the big hits have already happened. I'm not saying they can't click a mouse and put the price of silver at minus $40 like they did with oil, but it would defeat the purpose of them trying to get out of their silver short position. Because if they slam it even further, very few people are going to take the bait, I think. Everybody knows already. I mean, Ted Butler put out a red alert right before this little operation happened. And everybody was able to see it. And the smart traders would just piggyback off it. So right now, all the smart traders in silver are loading up on silver contracts to go long because inevitably, all the scared people and the tech traders who are right now going short and selling, I don't know what their appetite is for going short. Going short is a bank killer. It's you can lose your entire life savings and more when you go short, and that's been seen many times in the past because it's unlimited losses. When you're short, you got to find a buyer. If no buyer is going to take, for example, if no buyer would cover your short, go long, anything under $50, you're screwed. You're going to lose quite a bit of money. Or let's say $5,000. If you're short and you can't buy a buyer of your silver contract for less than $5,000 an ounce, you're gone. It's just such a stupid game. Jeffrey Christian talked a lot a couple of weeks ago about force majeure. So he's expecting a force majeure. He didn't say that. He said get ready for a lot of force majeures. What was it, Newmont Mining, I think it was, the largest silver mine in the world, had to use force majeure for some of their contracts because there's a strike at a mine. So, yeah, it's the second largest mining mine in the world. I think it's the first because what's classified as the first is actually 3 different mines in Poland. But in Mexico, the Pascuita, I can't say it, mine is still shut down. And a force majeure was declared on that one by the criminal banking slash mining company called Newmont Mining. Yeah, Newmont Mining. It's always been a joke. I mean, It was started, I think it was the Bush family started it, and it's just the whole thing is so corrupt. It's beyond corrupt. Everything out there is corrupt. But there are signs that we are close to the end. Again, they're gonna play around here under these moving averages. So the 200-day moving average is $23.28. Silver right now they had to stop it at $22. They stopped it right at 23. They know once it goes past these moving averages, right here, that's when the tech funds start buying, and then the commercials have competition in buying, so they got to start shorting, and it's wash, rinse, repeat over and over and over again. Now, at some point, the commercials are not going to short anymore. They know the shorts are bank killers. So we will see when that comes. I think we're coming into a very, very, very interesting time in about a month. Right now, silver's a delivery month for the COMEX, and we've seen there's literally no deliveries happening this year. COMEX is not the place to take deliveries anymore. Now it could be. Who knows? I mean, September's a big month as far as a lot of other things. And right now there's 58,000 contracts open, which is, 290 million ounces of open contracts right now. Obviously, they couldn't even deliver 29 million ounces, much less 290 million ounces. But as we get closer to the end of the month, that's when the crimes happen. They roll over their shorts so they can short the next month to keep the price down. We've seen it time and time again. Jeffrey Christian, as a matter of fact, in the Silver Symposium, back the one I got kicked out of, said, well, that's how it's done. The commercials just roll over their position. That's illegal for futures and options contract to control the price of silver. The CFTC didn't do anything about it, and it took the Department of Justice to finally come out and do that, which they did here in September of 2000. J.P. Morgan Chase agrees to pay $920 million in connection with schemes, plural, to defraud precious metals and U.S. Treasury markets. The key part of this, first of all, the year that they took this in 2020, J.P. Morgan Chase booked a $1 billion gain in their precious metals book. Ooh, nobody talks about that. That came out in a trial. They didn't even talk about it in their annual report or in any conference calls. But yes, it was a $920 million hit to J.P. Morgan, but they covered it with a sale of metals of $1 billion. And that was over 10 times what they usually book. Now, about 8 times what they usually book. Somewhere around the $15 to $20 million is what they book as their gain every year in precious metal rigging. But this is $1 billion gain. And nobody talked about it. It came out in the trial. I think one of the most important things is what the DOJ said. Now, remember, the CFTC was in charge of regulating Bank of America or J.P. Morgan during this entire time. Was it 8 years? Yeah, 8 years. And they were literally on the desk, not doing anything about it. Bart Chilton said, we had them dead to rights. There was a political decision not to bust them. Wow. And this is from the Department of Justice when J.P. Morgan got busted. For over 8 years, traders on J.P. Morgan's precious metals and U.S. Treasuries desk engaged in separate schemes to defraud other market participants that involved thousands of instances of unlawful trading meant to enhance profits and avoid losses. I heard it was tens of thousands back the way, and that was a different press release they had. Said Acting Attorney General Brian Babbitt of the Justice Department. Quote, now listen to what this is important for you right now. Today's resolution, which includes a significant monetary penalty, that's the $920 million, compensation for victims, I didn't get anything, did you? And, well, it would be a COMEX compensation. I haven't heard of anybody who's been compensated, by the way. And requires, listen to this, and requires J.P. Morgan to disgorge its unlawful gains. What were their unlawful gains? Well, through Ted Butler's research and everybody else who's had to have a brain, J.P. Morgan was shorting and rigging the price of silver lower so that they can pick up physical silver. And they got over 1 billion ounces of physical silver, according to the OCC data. And the way to disgorge its unlawful gains, they set up a leasing program through Bank of America. And it never said, we haven't figured out where that silver is going to. I thought it was Buffett and Elon Musk. Those made sense. But maybe it makes more sense since they are required to disgorge these unlawful gains to the DOJ. Maybe all that silver is going to the U.S. Mint. Because Ventris Gibson, the head of the Mint, said, we are greatly expanding Silver Eagle production, and yet they sell about a third of what they can make. It sounds to me the disgorging of unlawful gains means the U.S. government confiscated all that silver and is getting ready to use it as part of the new monetary system we see coming. That's what I think. We'll find out. But here's the big part is the deferred prosecution agreement. By the way, all the traders pleaded guilty. So Jeffrey Christian still won't admit that it's rigged, but that's Jeffrey Christian. Here's the DPA. Let's see, deferred prosecution agreement. And this is very important because it is a 3-year deferred prosecution agreement, or they can't commit any crimes. Obviously, they've committed many crimes since. But it starts on the day this is signed. So you go down, go down, go down. This is the most important date for silver holders, by the way. If you're looking for a date. I know everybody loves the dates. Don't get dizzy. There we go. 9/25/2020, 3-year prosecution agreement. That is 9/25/2023. That's D-Day for J.P. Morgan Chase. And you notice, if you look at the silver deliveries, the number one deliverer is J.P. Morgan. But it's in the customer account and not their house account. For the last zillion years, it's been in the J.P. Morgan house account because they were rigging mainly for themselves. And all of a sudden, when they signed this deferred prosecution agreement, house trades practically stopped. Everything went to customer. It's basically shell companies that they set up or colluding with their customers. This is an obvious case of collusion if these customers are real. Because they didn't do anything before the agreement was signed, then everything goes to them. And you're going to see come September, if we get past September, everything's going to go back to JP Morgan house account. That's how these criminals work. So keep an eye on it. All right. Again, commitment of traders report. We should be ending any day now. The longer they can hold it under the moving averages, the more the brain dead tech funds will be shorting and selling their longs. I don't know how much short they'll go from here. That's playing with fire. Getting rid of longs. This is the managed money category. You can see the last reporting week. By the way, this report comes out tomorrow for the day ended Tuesday of last week, which is pretty big. They'll probably get rid of another. I don't even know how many. They got 31,000 contracts. The managed money long. That's pretty low for them. And then the short, the managed money is they're net short. If you look at it right here, they're net short for managed money. That's kind of where the bankers want them. And then the bankers, are they net long? Let me see here. Just about net long. 35. No. They're the top four should be around 17 or 18,000 contracts short. They've always been short, and they play the game from the short side. And you can make money shorting and then covering on the slams and then short on the highs until you don't. And then your company gets destroyed. So we should be nearing the end of this game. Like I said, this is the last time to get your Silver Eagles under $30. This is the last slam. As you can see down here, this is what happens. They hold it down for a couple weeks and then bang. And then they short up here. Now that's the question. This time, will they short the highs or will they just let it go? Everything is colliding with this September delivery month and the September 25th date that JP Morgan gets their get out of jail free card. So keep an eye on it. Really exciting things going on. The U.S. Treasury yields are exploding higher. That was the problem at the first quarter when the two banks went down, or 3 or 4 banks went down. That is a massive problem right now. So we should see a lot of bank failures coming up maybe by the end of the month. And then September, October is bank failure city. Because every little tick this goes up, This is the 10-year. Every little ticket goes up is the banksters, the tier 1 capital value of their 10-year bonds gets destroyed. I mean, I think they're worth half of what they bought them for now. Every tick up of the yield destroyed. And it also destroys people keeping the money in the bank. Why would you keep money in the bank? You have credit risk with the bank. Yeah, you have the FDIC. Some people do. Some people don't. Buy 10-year treasuries, you're going to get a lot more money than what you get in the bank. Or investing. Why not take risk-free money, theoretically? I don't think it is risk-free. But buy treasuries, you're going to get 4.3%. Everything else is a massive risk. Bubble city everywhere else except precious metals, of course. Very interesting times. We should see a lot. FDIC is coming out. I think it's the end of the month. The BRICS announcement supposedly happens next week. I don't think they could ever do a real gold standard. It's just more fiat money, what they're talking about, and like a nod to a price of gold. If they say that, I don't think they'll say it. If they do, who cares? Who cares, right? It's not like they're using gold for transactions. No. And Jim Rickards said, he was the guy really talking about it a lot and made the announcement. He said, no, they don't even need to use gold. They can go off the price of gold. Well, the U.S. government determines the price of gold with the market rigging. So what does it even matter to the U.S.? It doesn't, ultimately. It used to be he who holds the gold makes the rules. Now it's he who controls the computer program trading makes the rules. And that's been since the invention of computer program trading, the invention of electronic banking. Alan Greenspan in the early 1970s implemented it with Arthur Burns and Alan Greenspan. We're working together to rig the prices all the way up through, when Volcker raised the price of raised interest rates up to close to 20%. It was all part of the plan, all part of the con. They let gold go to $800, and then they slammed it down with the computer trading programs. And then they put Alan Greenspan there because he was in charge of the clicking the mouse. 2 months later, we had the crash, Black Monday of 1987. That was a computer-controlled crash in the markets. You didn't know it at the time, but in retrospect, they looked back and said, oh my God, these computer programs were going crazy. It was like the first computer-controlled destruction. And that was Greenspan trying to crash the system. They tried to crash it by creating bubbles in 2000, the dot-com bust. Then they tried to crash it on September 11th of 2008. And now we're coming up to the next potential crash. I think this is the mother of all crashes. China is doing their part. China's falling apart right now, financially, if you haven't seen. And as I said, it's all going to be on purpose. The wars fought now are not with bombs. The wars are financial wars. Clicking mouses all around the world to destroy lives, destroy companies, destroy pricing. Everything has to change. And everything is changing. Anyway, that's what I got for you. Again, check out the discussion on the private road with Andy Schectman. You don't want to miss that. You don't want to miss it. This is Big Square, roadtoroad.com.